All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm on just a little bit early here, but just not going to do anything here. Just going to fill out the spreadsheet a little bit for the upcoming trade and make sure have everything right here. That's about it. I am going to be buying some gold here, assuming the signal holds here in the next 2 minutes. I'm assuming that it will. We'll go out and buy some GLD calls. It is the only entry trigger. You'll hear me say this again, but it's only the only entry trigger here today. I do have all the bearish crossovers in a list here that we'll go take a look at and talk about them here, because I do think something interesting is happening with it, but we do not have a bearish signal among them here. I was surprised to see the bullish signal on gold. I did not expect that. We haven't seen a bullish signal in gold since we played it last time back here at the end of May, early June time period for the challenge. It worked out pretty well for us. Repeated performance would sure be appreciated, but we'll see here. Okay, just on a little bit early, filling out some of the data here for the challenge. All right, give me about 30 seconds. I'll be right back on, and we'll go make this happen. All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I've been on just a little bit early, filling in some of the data here for the spreadsheet. We do have a trigger on the board right now that we are going to go out and trade. GLD, gold, the gold ETF here. And then we'll go take a look at gold and a bunch of stuff going on with it here. But that is the only trigger here today. We do not have any downside triggers. I'll show why here. First, let's go out and trade some GLD, and I'm looking at the 3rd of January calls here, and I'm looking at the 139 strike, and I'm looking at 8 contracts here. So that'll be put about 1,600 in, a little bit more than what I would normally be doing at this case, and that just comes down to the delta situation when it comes to GLD. But let's go out and fill this. That way we can get the alerts out here. Let's see if they'll fill that at 138. Looks like they're going to want to be stingy. Let's see. Fine. I'll do their market order. 199 is my entry price there. 199. Into GLD, the 3rd of January calls. So it gives us 31 days. $1.99 for 8 contracts here on that. Okay. There we go. All right. So in here at $1.99. And let's get the price of the stock here is, let's see, 139.28. All right. And there we go. I'll fill in, let's see, I filled these in incorrectly. There we go. And let's see, we're at $1.99 here, so cash in. Puts us just under 1,600. And off and rolling. Now let me grab the delta here. We're looking at a 500 or 439 delta and a 24 theta. And Vega, we are looking at a 130 Vega. That's a high Vega. That is a very high Vega here. But we tend not to see, the implied volatility on GLD change all that much, uh, but it is a risk on this trade. And I did look at it and consider and go, well, do I make this trade or do I wait for, maybe tomorrow, get a little better option price here because we're about a point and a half high on that. And I decided, no, I'm going to go with it for two reasons. Number one is it's not going to make or break the challenge. Number two is I do not want to be missing out if it, takes off and goes. And, when it comes to gold, it can take off and go, and it can take off and go and, kind of leave you sitting there. So, we'll see here. But that gives us an exit price of or a stop exit price of 138.14. So 138.14 is just a little bit higher than yesterday's close. Okay, so basically a gap fill. We'd have to move on out. And on an exit here, 141.56. Right, so 141.56, which will bring it right back up here to where it was, kind of the beginning of November, and would definitely be nice to see there. Okay, so into gold, running with gold, and we'll run with it with the with the parameters that are on here now. Okay. All right, let me just adjust this here. There we go, and we're rolling. Okay, let's go out and take a look. Here are all the bearish crossovers on the challenge watch list today, and I'll scroll through them and just kind of show them to you. Most of them, they're not triggering for the exact same reason, right? And they're Apple scenarios. They're just coming off of new highs, right? And we're not going to get bearish signals off of new highs. We're not going to get bullish signals off of new lows. It just, the algorithm is set up so that happens maybe 1 in 100 times, and that might be overestimating it there. It really is. It really just, when you're playing highs and lows, you just lose a lot of accuracy, so we tend to stay away from that here with the algorithm, or it's built to stay away from that with the algorithm. So Apple coming off a new high, Amazon also coming off of a new short-term high. This one though did have a chance to trigger, but isn't triggering. One of the things that you'll see on this chart is the stochastics 39.1. Right. For bearish signals, we tend to need the stochastics 39.1 below 50. For bullish signals above 50. Now, that's not always the case, right? The algorithm doesn't use the stochastics 39.1. I just have it here from a visual standpoint because you kind of tell, all right, does it have a decent chance of triggering or not with that? And as it sits, it's not triggering. They're bearish. We have Bank of America, which is coming off of a new high, so that same Apple scenario. You can also see the Stoke 39.1 way up there. ConocoPhillips, which does have a higher high over here in September, but you can see the Stoke 39.1, and that is the theme throughout almost all of these, from Delta to Ford, right, to Facebook, to FCX, right? Every one that I scroll down and we look at the signal, or we look at the crossover, we're looking at a 39.1 that's pretty elevated, right? And, JP Morgan, same situation. And so what does that do? It lowers our odds a little bit. Las Vegas Sands, MGM, I'll finish the rest of them. Microsoft, and Netflix, there. And we also have Nike, which I thought had a chance to trigger, but it is not triggering. Schlumberger, it's above 80 on the Stoke 39.1. The SPY, same thing. Twitter, it's below 20, but it is not triggering. The consolidation risk on this is incredibly high. And, on any of the crossovers for a while, we're probably not going to see a signal come in. U.S. Steel, same difference, or, just same thing going on there. Now, the last time we had something like this happen, right, where we just saw this massive move or massive type of crossover action that really didn't create many signals. there to the upside was back here in June. We started to get a few upside signals, leaking in a few days later, but most stocks were coming off of their lows. For instance, a Caterpillar. Back here in June, was coming off its lows. It had a 3.7 crossover, went on a monster trend, but it did not create a signal. Right? We saw some of this in July, where stocks were coming off of new highs and we didn't get a lot of downside signals, and that's been one of the elements in this market that it's happened. A lot of the crossover action happened off of highs or lows, so no signals. But the last time we saw this many crossovers with stocks coming off of either highs or lows was back here in June. And back here in June, we had a shift in the market vibe. We had a lot of crossovers that didn't qualify as signals. And we're kind of seeing that similar element out there right now. We do have the market vibe triggering bearish today. It's reading as 0. So is a, going from 7 down to 0 in 2 days is a serious erosion of the market breadth and, what we tend to see in a bearish situation. Last time we saw a bearish signal was there near the end of September when the bearish signal came in. And we have a, pretty good bearish signal on the board right here, right now with the market vibe. So, as far as comparisons and everything else, when I look at just the crossover action combined with some of the market dynamic shifts, very, very similar to what we saw on the bullish side here at the beginning of June. And, what do you make of that? Well, from a challenge standpoint, I can't go out and, make up signals, right? That's not in the cards there, but it does have me looking at some of these, a Bank of America and going, okay, do I get an opportunity to play this lower? Maybe short this a little bit. Microsoft, do I get a chance to maybe trade some of these a little bit lower for a more dramatic type of a sell-off? Here, and I haven't decided on any, right? I've kind of let the day play out. We've seen a lot of flat here, throughout the day. We saw the morning drop and then, kind of this flat and, just slightly drift on higher from the market, but not to any real significant degree. In fact, here's S&P futures, and you can kind of see the market opened up right where I have my mouse, which is 1 point lower from where it is right now. Right, and look, I think that the risk of this continuing to happen is very high, both on gaps up in the market and gaps down in the market. And I don't think it's something that we can look and say, well, that's just a anomaly. I think it's going to be something that's going to be pretty normal throughout the month of December. That could change dramatically in January, but we'll see. All right. So anyway, that's where things are from a market vibe standpoint, from a trigger standpoint, from a challenge standpoint. Okay. But I want to take this opportunity to go out and take a closer look at gold, right? The yellow stuff, because, we talked about gold back here in May and June. I talked about it from an investment standpoint and, was very bullish on gold and told you the several plays that I had on gold at the time and, just expecting a big move to come. And a lot of that, had to do not with the daily chart, but had to do with the longer-term charts, right? If we kind of come back and back gold off to a monthly chart, right, we kind of see that it has been in a consolidation for, since 2013. We're talking about a 6.5-year consolidation on gold. That's a monster consolidation, right? We don't see that very often when it comes to commodities. And gold has been in a 6.5-year consolidation. Wow. What do we know? Well, when long-term consolidations break, they tend to break big. They're not just little breaks. They tend to be very large breaks that are sustained for long periods of time. And, we saw the first shot up, right? And, I talked about I removed my positions. I wasn't interested in getting back in until we had a significant pullback or consolidation in the short run. And we've had a lot of that, right? Since gold went up and hit its highs, it has just been, just this kind of slow drifter, not really doing anything, very descript here. Right, and we've seen some crossover action on the 3-7. Hasn't created even short-term signals. Today's the first time we've had a short-term signal on it, since what we had back here in June. If we come into a weekly chart on gold, right, you can kind of see what this looks like. We have the massive breakout, right? Keep in mind on the monthly chart, here's the long-term consolidation on gold, right? And we have the massive breakout. Right, the massive breakout is on. We've now had a little pullback off of that massive breakout, which is very normal. So the question comes is it ready for that next leg? Do we have a little bit of flag type pattern here? And, is the next leg ready to go? Well, I think from an investment standpoint, if you're looking at the next leg ready to go, I think it's time to take a closer look in a more serious way than over the course of the last 4 or 5 months, right? It's time. We've had that element, that time element come on out. You don't turn on the news and hear all the gold bugs talking about gold to $1 million and all that kind of crazy stuff that we hear from the gold bugs when it starts to get a little frothy. Most times when gold's ready to really move, nobody's really talking about it. It's pretty quiet on the gold front. And right now it's pretty quiet on the gold front. Is this the perfect short-term entry and it's only going to go up from here? Probably not, right? Whenever you're dealing with a commodity from an investment standpoint, there's going to be some volatility. Yeah, does it have a signal? Sure. Am I expecting it to go higher? Yeah, I am. But from a investment standpoint, you want to give yourself a little leeway. You want to be able to weather a little bit of pullback or something of that nature in how you set up a position. But is it time to start taking a look? Yeah, absolutely. Now, one other thing I want to show you here with gold just comes down to seasonality. Right, the seasonality of gold, and I'm just going to go back to 2011 here. Why? Because, when it came to central banks around the world, we saw big changes happen in 2008, 2009, 2010. And, the policies were kind of in play by 2011, and the policies haven't changed all that much, since then. Right? And take a look at the seasonality of gold. And we talked about this in June. Because we got a bullish signal here at the beginning of June. And I remember getting on video and saying, look, June seasonality isn't all that great. It tends to go up, here and there, but it's not all that great. July and August seasonality have been phenomenal, right? They've been very strong for it. And are we going to see some, jumping in ahead of what has been the seasonal trend, which we have seen? We have seen quite often. Heck, in fact, over the last few years, we've seen investors getting in front of the Santa Claus rally by buying in November and selling in December rather than buying in December and selling in January. Here we are with some of the seasonality. Now, seasonality for gold in December is not very good. Right? It just simply has not been very good over the last 9 years. It's not the worst month for gold, but it's not exactly been a great month for gold. But to me, this is one of the reasons to take a look at being a buyer, again, investment-wise, at gold, right? And using some of the December seasonality to get in. Not to say, hey, you know what, December I'm expecting monster gains. Yeah, you could have them. I hope you have them. But to say, look, average of a 1% pullback, okay. On an investment standpoint, you could ride that. That's not a big deal. But then going into next year, and we start to look at the seasonality of gold and some of its best performance, we're looking at January, February is tending to be pretty strong months, here for gold, and something that can give you a little bit of comfort going, all right, you know what, I'm holding a long-term position. It's pulling back just a little bit. Great. We got some of the seasonal elements coming into play at the beginning of the year. And so, definitely time to have gold on the radar. Again, not to go buy a weekly call option and, bet everything that it's going up tomorrow, right? That's not the mentality there. I hope you're right, right? I hope gold just, zooms on higher and, is sitting there, 40, 50, 60 bucks higher by the end of the week. That would be nice to see. But, I think there's potential that happens. But from an investment standpoint, I don't think you bet on that type of thing. You look and you say, okay, do I put a call spread into play, buy some of the GLD? You can even look at some of the double levered ETFs. One of the things that I normally want to see when it comes to being bullish on gold is I want to see that gold is outperforming the gold miners, right? This performance metric. And if we come in and we compare gold to the gold miners over the last month, right, you can see that the gold miners are down 1.2% with gold down 2.2%. We are starting to see it shift again. This has been a ratio that has shifted in favor of the bears, right? And one of the reasons why I've talked about not being a huge fan of gold for a while, right, while it pulls on back. And hey, when we see gold take off, we tend to see the gold miners perform better than gold, and they both move up, but the gold miners tend to move up to a stronger degree. And here over the last little bit, we're just starting to see the gold miners outperform just a little bit. And here, let me pull it up over the last 14 days here. But you can see over the last 14 days, gold miners are up 4%, while gold is up 1%, right? So in the short run here, we are seeing the gold miners, really kick it into gear. That tends to be a very bullish sign for gold overall, and something that I want to see. Now, we did not get a bullish signal on GOLD, which is the only gold miner on the challenge watch list today. We did not get a bullish signal on it here today. And GDX is not on the watch list, so not there for me to trade. But from Newmont Mining to GOLD, there's been some consolidation in the industry, so you don't have as many to choose from. But we've talked about some of the back in June, we talked about some of these gold miners that are very high risk plays, but also extremely high reward plays. Harmony, HMY, we saw this stock, it's almost doubled from where it was at the end of May. And that's, even with this pullback, to see this stock push up into the $5, $6 area on another moving gold is very likely. If you look at Yamana, AUY, same thing. And you'll notice this had a beautiful push up here in June, under $2, has come up to the 350 area, nice consolidation, trying to break out of that consolidation here. It's a high-risk play, right? A much higher risk play when it comes to gold. But if gold makes another move higher, these gold miners, especially these more heavily shorted gold miners that have lagged for now many years, right? Yamana has had a rough time, right? While gold has been consolidating, Yamana has been tanking, right? Gold started its consolidation in 2013 with Yamana up here around 13, 14 bucks. It has not been kind to the stock. And I'm not saying it's getting back to 13, 14 bucks, but when you're looking at a 350 stock and you're talking about a $5 to $6 area price target, that's a pretty darn big move. So if you're looking for more aggressive ways to, perhaps get into gold, take a look at Harmony, take a look at Yamana. There are a lot of interesting ones. The one that I'm trying to think of is not coming to my head. Let me find it here. This one really had a great time, and we had talked about it before. Let's see here. It was a newer one on the scene, and really just took off. But you'll see on these, a lot of these are just some of those low dollar amount. They're going to be higher risk. Not Hecla, not Kincross, not Load. Yeah, Load. That's a troublemaker there. Not Nova. Sorry, I just not coming to just not hitting me. It'll hit me. It'll hit me, and I'll share it with you when it does. But yeah, yeah. Anyway, it'll hit me, and we'll go take a look at it here when it does. But anyway, that's gold. Again, in for the challenge. Challenge investment. They're two very different things, right? And none of what I've said has anything to do with the challenge trade. But I figured I'd take this opportunity to go and take a look at some of those more bullish things with gold that we continue to see shape up, and granted, love to see it just kind of, make a nice little June move again and see this thing push back up into new highs. And I do think there is the potential of that. But it is time to start looking again from a investment standpoint here as well. Thanks for hopping on. Have yourselves a fantastic day, and we will talk to you tomorrow. Take care.